Hey everyone, welcome to this video on my channel. Today in this video, I'm going to discuss about this particular stock which has seen a raise of almost around 600% in the last 2 years. Today, this company is valued at 1 lakh crore. So what we are going to do in this video is try to analyze this company and see if it is actually worth valuing this company at 1 lakh crore. So the interesting fact about this company is this particular company trades at a PE ratio of 1000. You heard it right. It is not 10, 20 or 100. It is a PE ratio of 1000. So let us see if this valuation can sustain for this company and why I believe this particular stock is overvalued. So by this time you might have already guessed the name of the stock. If not, let me take you to the screen recording. So before we move on, I would like to tell you about a couple of things. One, you can check out our services by simply visiting quickalpha.in. So I have attached the link in the description, and also you can open a free first stock account using the link in the description and get 2000 rupees worth free brokerage. So you can make the best use of it by clicking the link on the description and opening the account. So there is this very famous quote by Warren Buffett which says, price is what you pay, value is what you get. So in case if you end up paying very high price for any particular stock, right, you will end up paying the price later on, because there are cases in history where if you end up overpaying for any particular stock, years together the stock wouldn't have performed. So during the dot-com bubble of 2000, we saw Intel stock price surge up to $60 or $70 per share, and today the same stock is trading at $20 per share in spite of selling 1 billion chipsets. So we are not talking about the sales doubling or tripling, right? So the company overall had sold 1 billion additional chipsets, and in spite of that, the stock is worth 1/3. Another classic example is that of Cisco. So Cisco basically was trading at $80 per share during the dot-com crisis and just before the dot-com bubble burst, right? And today it is trading at $40 in spite of spending almost 25-26 years. It is not that the company has not grown. The only issue is, even though the company has grown, right? So back then it was valued at such a high valuation, people who paid $80 will still be waiting for them to get back that price. So during any peak rise, in case if you end up overpaying for the stock, you will have to pay the price much later on. This way we have quite a lot of examples. So a very simple example could be PSU stocks itself. So people who overpaid for PSU stocks during 2007-2008, so they had to wait almost around 16 to 18 years for them to recover money. So even now, some of the stocks haven't actually hit their previous high, which means if you had overpaid back then, you had to keep waiting even today to get back your price. That's the reason it becomes very important for us to understand at what valuation we are buying a particular stock. And the stock we are going to discuss today is none other than BHEL. So if you take a look at India as a whole, India requires a lot of power and the power demand is surging year by year. So if you take a look at BHEL as a whole, they are mainly involved in power equipment installation and service. So power equipment as a whole, or power generation, can involve multiple things. One is solar, hydro, it can be thermal, it can be nuclear. So multiple different sources of generating power, and BHEL mainly involves in installation and servicing this entire power equipment. So the thing is, 79% of its business even today comes from installation and servicing this, and on top of that, so remaining 20 to 25% of its revenue actually comes from industrial power. So any big industry is being set up, so they will also have their own power requirements. So they will have to set up the entire power stations for this industry. So if you take a look at the broader revenue mix of BHEL, this is how it looks. Almost around 70% of the business is coming from power equipment installation and servicing for the government, nearly 20% from the industries, and 10% for the auxiliary services, right? So not just that, 80% of the revenue for BHEL is actually coming from domestic business. So they do exports, but that accounts only for 20% of their overall business. So BHEL is mainly dominating the domestic market in India, and it is also trying to fulfill most of the power plant projects. So if you take a look at it, so till today, BHEL has actually fulfilled 53% of the total Indian power requirements. So out of the total power capacity installed in India, nearly 53% is installed by one single company alone, right? And that is none other than BHEL, right? So today, the power capacity in India stands to be around 490 gigawatt, and this is expected to go to 900 gigawatt by 2030. So we have another 6 to 7 years before which the power capacity is actually going to double, right? So this is where the biggest opportunity for BHEL lies, right? So because the power consumption is going to double, right? So obviously the order book is also going to double. So while the order book doubles, so the equipment manufacturing and installation, it can be servicing, everything is going to start increasing. But is the story as good as it looks? Again, let's go back to the screen recording to find out more about BHEL. So today, if we take a look at the BHEL market cap, it is around 91,000 crores, and the stock is trading at 900 PE. So sometime back, it was actually a total of 1000 PE at which the stock was trading, and we have already understood the growth opportunity for BHEL. So the power consumption is expected to grow, so will the services and equipment installation. But what we should really focus is, if you take a look at the overall sales of BHEL, right? So let's take a look at it yearly. So even though in the previous years, so the power capacity is continuously increasing, right? You see that the sales of BHEL is not really growing. Why? Because in case even if the demand doubles, right, so the new power installation capacity is not going to compound, right? So today overall I have 490 gigawatt, right? So tomorrow if I want 20 more gigawatt, I'm only going to bill for 20 more gigawatt. It is not that I'm going to bill for total of 510 gigawatt, right? So power installation is not going to compound, rather it is going to be slightly linear, because every time you will only have additional requirement for which you are going to actually charge. And that's the reason you see right over here, it is not very consistent. So the sales in 2013 was 48,000 crores, then there was a dip to 25,000 crores, then there was slight increase towards 30,000 crores, again there was a dip towards 17,000 crores. So the important thing to note here is this 17,000 crores was a year after COVID, but post that the recovery hasn't been significant. So if you see any other stock, for example, if you see REC, you see any other power stock, you do see that, so they have actually gotten back to their pre-COVID levels. So their pre-COVID levels was around 30,000 crores. So even after 3 years being passed from COVID, they are even unable to get back to their pre-COVID levels. So 2020-21 was when we had COVID, and even after 3 to 4 years, they are unable to achieve their previous best. So you do see that even though they are continuously installing new power capacity, even though they are continuously maintaining new service equipments of power, they are unable to compound their revenue growth. So you can see here from past 10 years, the revenue has been negatively growing. So it's almost negative 5% growth what we are getting to see in BHEL. So after this comes the second major problem. So even though BHEL is having pretty good revenues, they are unable to have their good operating profit margin. So when you take a look at their expenses, right, so you do see that 50% of their expenses is actually going towards material cost, right, and remaining 25% is going towards manufacturing cost, and remaining 23% towards the employee cost. So just manufacturing and installation is consuming around 75% of the cost, and remaining 25% is going for the employees. So right over here, one very concerning thing what you get to see is they are unable to expand their operating profit margin. So that means in 2013, whatever was the net revenue, in that almost around 20% of it was the profit remaining, or operating profit. So remaining everything consumed only around 80%. But slowly and steadily you can see this dip. So this means they are unable to charge very high margins, or they are not able to charge very high price. It can be mostly because of competition. So there are a lot of new players coming into the market who are competing with very stiff prices which BHEL is unable to match. So that's the reason you see that their margins is continuously dipping, right? So this is one more cause of concern, because it is not that the margins are even showing any sign of improvement, right? So even if you take a look at this, right, so 2023 they had a negative margin, even 2024 June they had a negative margin, right? So they are actually even now running their net end-to-end business on a negative margin. So they are unable to break even at the operating profit level, and this is a real cause of concern. Now, when we further go deep in and take a look at it, so they have an increasing debt. So 2016-17, they had almost got their debt to zero, and now you can see again they have started to pile on their debt. So debt can be of different types, right? So if the debt was of lease liability, then it would have been a different case. But these are actually short-term borrowings. So they are building on their short-term borrowings. Whereas on the other hand, you can also see their reserves deplete. So where will this debt actually show the effect? The debt will again show its effect in the P&L. So you can see in 2013 they were paying 128 crores as their interest cost. Today they are paying almost close to around 800 to 900 crores as their interest on their debt. And this is making a severe impact on the bottom line. So if you take a look at it, so if you see their net profit, which was around 6,000 crores in 2013, and later they had continuous series of losses in 2020 and 21. Post that, unfortunately, somehow the business is unable to pick up. So whatever they made a loss in 2020, they are still unable to recover it even after 4 years of operation, right? So in spite of all this being an issue, right? So further, when you take a look at the overall balance sheet, right? So they have issued additional capital. So that's the reason the share capital has increased, the borrowings have increased, reserves have depleted. So nothing overall on the balance sheet looks good. But we don't know why exactly, in spite of all this happening, this particular rise of 600% has been witnessed in this particular stock. So now comes the question of valuation. Is it really worth paying this price for this stock? Let us try to find out. So let us assume that BHEL revenue is going to double from here, right? So the revenue is going to double, the operating profit margin is also going to double, which is a very unlikely scenario that you're simply going to see a 2x revenue coming next year, right? So that is clearly not seen in the business recovery over the years. So you can see right over here. So one very simple example can be, you can see the March 2023 revenue and March 2024 revenue. So there is hardly any increase in the revenue. So that means clearly they are not witnessing very high demand. And also you can see other cases also. For example, if you see September 2022 to September 2023, you see that actually there is a decline in revenue. And we have already discussed why this is going to come. So even though the power demand is going to increase, it need not be at a compounding effect. So that is one major reason why we are actually going to witness this. With, let us say, the revenue is going to grow somewhere around double, which means we are going to get back to this figure of 48,000 crores. Let us also assume this profit margin is going to double again, right? So from 2%, let's say we are going to go towards 4%. So all of this are very optimistic and very unlikely scenarios. Or let's triple the profit margin, right? So let's make it 6% instead of 2%. So given all these factors, when you actually end up calculating, which you can see it on the screen, so I'm going to show you a complete calculation where the revenue is doubling. Then we are also seeing that operating profit margin is actually growing 3 times from 2% to 6%. So in spite of all of this, the overall profit of the company post tax is going to be somewhere around 1500 crores. So now just imagine, so we are keeping such an optimistic figure for this entire company. So we are literally growing the sales 2x to 48,000 crores. We are tripling the net profit margin, everything. In spite of that, if the profit is only going to come to 1500 crores, even in that case, you would have paid a PE of 60 for this particular stock, right? So currently you're paying a 900 PE, and even in the best case scenario, I don't see how exactly this stock can be valued less than a 60 PE, right? So with all the optimistic case considered. So now just imagine in case if the things what we actually thought of doesn't happen, right? So the revenue doesn't double or the margins doesn't double, right? So even in that case, you would be paying a very high value for this particular company, right? So this might have happened in the euphoria of the PSU run up. This stock might have seen a big increase. But after 3 to 4 years with Indian economy doing the best across the world and power demand shooting off the roof, all other power companies doing really well, this particular company is even unable to come back to its previous pre-COVID levels. So if you see any power transmission company like Power Grid, right? So I'll just show you all other power companies where their revenues have actually, or their business has actually gone well past their COVID previous peak. You can see the net profit also sustainably increase. So you can see along with Power Grid, you can also see something like NTPC, right, which is also in power generation. So here you can see their sales from pre-COVID almost doubling, even their net profit consistently increasing. If you see power finance companies like PFC, right, or REC for that matter, right, even here you see that from the pre-COVID levels, the sales have almost doubled, so have the net profit. So you can see some private power players like Tata Power. So even if you take a look at Tata Power, from the pre-COVID levels, the sales have doubled, so have the profits. So literally the entire ecosystem has seen a business boost where their overall revenue has doubled from the pre-COVID levels. But unfortunately, BHEL is even unable to meet its previous pre-COVID level revenue. So in my opinion, I am not saying that this stock is going to crash. So all I want to say is let's better not end up in a situation of Cisco or Intel where we end up paying a very high price today and we have to pay the price for that later. So this is not the first time it is happening in the world of stock market. There have been many cases if you don't value the company right and if you don't pay the right price for this company, you are going to really have a bad time holding this company. So the thing is, even though the power capacity is set to double, it is going to happen over the course of 7 years and it is not going to happen tomorrow. In that case, you do see that BHEL revenue, unless they start doing something really different in their business, is going to pick up the way we are estimating. So whenever you are investing, just be mindful. So I just came across this company and I thought it was a pretty interesting case study for us to sit and analyze and try to understand the business. So let me know what you think in the comment section. If you have liked this video, make sure you hit the like button, share this video and also subscribe to my channel.